Hello and welcome to Views on News. I am Jawad Yahawi. Pakistan's Finance Minister Mohammad Aurangzeb says Pakistan's economy is moving in the right direction and significant progress has been made over the past 14 months, particularly in reducing the current account deficit and bringing inflation to its lowest, unquote. According to the Pakistan Bureau of Statistics, inflation rate declined to 4.9% in November 2024. It was 29.2% in November 2023. The finance minister has also reiterated, let me quote, that Pakistan is dedicated to implementing the IMF program with ongoing economic reforms and efforts to simplify the business process, unquote. The finance minister has also talked about the importance of private sector, housing sector, and also the existential problems Pakistan is faced with, including the population growth and the climate-induced disasters. All these important points of finance minister's talk regarding the economic front are for discussion. Also, a major development, bullish trend continues at Pakistan's stock exchanges, with the shares crossing over 105,000 points today. Let me quickly bring in our esteemed panel of guests who are joining us for the discussion on this important topic. Mr. Humayun Iqbal Shami, President, Pakistan Economic Forum. Mr. Shami, thank you very much for your time. Also in the studio, we are honored to have been joined by Dr. Khalid Waleed. He's an economist. Dr. Waleed, thank you very much for your time, also for being with us on the show tonight. We really appreciate that. And on Skype, we are honored to have been joined by Dr. Usman Chohan. He's an economist. Dr. Chohan, thank you very much for your time, also for being with us on the show tonight. Really appreciate that. Mr. Shami, let's begin with the bullish trend at Pakistan Stock Exchange. This has continued in the recent past, now crossing over 105,000 points. What factors do you think have contributed to this particular continuous bullish trend at Pakistan stock exchanges?
There are multiple factors behind it, because actually the stock exchange is always considered as a barometer for the economy, health of the economy. If your different sectors of the economy, like exports, like your trade deficit, your balance budget deficit, and all these factors, GDP growth and tax collection, if it is in the right way, then definitely it gives a hope for the investor to invest more, because they presume that there will be more profitable to invest further. So this is, at now, along with this, that the health of the economy is improving in the last 1 year. There are some other factors. Big factor is the drop in the monetary policy, which actually at time are over 22%, and now it has come about 17%, I think.
15%.
16%. 15. So, but it's likely to be dropped further, in this coming monetary policy. So obviously people are drawing their money from here, because these people always look for the better investment or for the better profit. So now they feel that the stock exchange is going to be a good avenue for the parking their money. So because dollar at times, used to park in the dollar, but now after we have seen that the dollar is crashing in the Pakistan market, and it's still overvalued. I will say that it's overvalued for about 50 rupees. So people are thinking that dollar might go down further. Property also is not a good avenue. So obviously stock exchange is a very good avenue for them. Then another thing is this, that Pakistani stocks are still undervalued. If you look at their price along with the earning per share, still it's about let's say in some scripts it's over 30%. OGDC at time, it used to have a price in the beginning of this year, it was being traded about 70, less than 70 rupees a share. Rather no, 70, it was about 48, and but its earning per share was over 30 rupees. So it was it's not possible for any other script, So but now it has gone up to 200 rupees. So still I think that if we look at particularly in the dollar value, because the dollar exchange rate at 2017, it used to be 100 rupees or 104 rupees. Now it's 277, 278. So it's almost 3 times, almost 2.5 and 3 times. So, but looking at the some of the script which are being traded at some cement script are being traded for 800 rupees that time, when it used to be 100 rupees a dollar, and now if it goes up to 1000 rupees and 1100 rupees or 1000, it's not much, you know. So it's still undervalued, I would say. So there's a lot of, I mean, these are the basic factors, you know, which are day by day our stock exchange, and then, you know, its stock exchange does not run on the basis that on the maybe on the present scenario, it looks the future scenario also, basically, that after 6 months or what 1 year, you know, these companies are going to give more profit. Pakistan overall scenario is going better and better. So, you know, future aspect, all the present situation and looking at the overall scenario. So, I mean, these all factors are there, but two basic factor which I told you is the exchange rate, sorry, the drop in the monetary policy, and then the still our shares are very much overvalued. Oh, sorry, undervalued.
Shares are undervalued.
Undervalued.
Okay, so Dr. Waleed, what's your understanding when we talk about the reduced inflation, when we talk about the month of November 2024, considerable reduction in that rate as compared to that particular period in the last year in 2023. Do you think it has any sort of connection with the bullish trend at the Pakistan stock exchanges?
Well, let me start with the Pakistan Stock Exchange. Stock exchanges all over the world, they are the indicator of confidence, they are indicator of credibility maybe in the market, maybe not in structural terms, but still it is a very good indicator depicting the health of the economy for a short period of time. But still I would say that we need to trickle down these macro level indicators and improvement in those indicators from the micro level, so that the macro level prosperity will reflect in the micro level side. And then secondly, there are quantitative indicators, particularly in terms of market improvement, stock market improvement, GDP improvement, growth rate, inflation coming down. But there are some perception based indicators as well, which means how the market is responding to the confidence level, to the credibility level. And third thing that is very important, how this trend will persist in the long term. That would be very key thing to observe, and that persistence depend on three things, that is confidence, credibility, consistency, and lastly very important, that is coordination between federating units, coordination between your financial institutions and your ministries. That would be very important thing to have, but still we need to gauge on a long term basis, not on a short term basis, because Pakistan, we are sort of prone to have these short term improvements, boom and bust cycles, but we need to have consistent policies, and government has did a good job in establishing the economic discipline, in maintaining exchange rate, as rightly told by my colleague, that interest rates are going down. This reflects that cost of borrowing would be lesser, the cost of doing business would be lesser, but still we need to have this transition from improvement in stock market indicators from a real sector that is bringing more and more investment to the infrastructure side, and infrastructure side that complement economic growth, and in that way we will increasing our revenue in terms of tax and diversifying it. That would be the good thing, long term policy horizon in a way.
So it's because of the reduced monetary policy rate as well. So that was reduced because of the inflation continuously being reduced. Now in the month of November it has hit 4.9% as compared to 29.2% back in 2023, and also considerable reduction as compared to the last month also, where it stood at somewhere at around 7%. So I mean, how much that particular factor has to do with this bullish trend of PSX?
Well, again I would say that it should reflect in terms of micro level prosperity. The stock market index, they obviously show the confidence in the market, but the real confidence would lie in terms of households. They are reaping the benefits of this drop in inflation, and this sort of directly connected with the capacity of the government in terms of implementing the drop in inflation. And implementing the drop in inflation means that price stability in terms of having market based interventions, not in a sense that would hurt the market competition, but still the market should run fluently in a market based economy in a way that is maximizing the welfare of the consumers and again trickling down the impacts of these macro level indicators to the micro side. This will sort of boost the confidence of consumers, and obviously when consumers are confident, market would be confident, and when market is confident, more investment, not only international players but the domestic players, those
Very
are
important point made. Let me take this
demoralized.
particular point to Dr. Chohan also. Dr. Chohan, what's your understanding how much this particular reduced inflation has to add to this very bullish trend at the Pakistan Stock Exchange, crossing over 1,05,000 points today, and this particular bullish trend has continued in the recent past also? And do you expect after this particular reduced inflation rate, there is likelihood, a highly likelihood of a reduced monetary policy rate in the coming days also, and how much does that give a boost to the overall investor confidence?
Absolutely. I think inflation is a crucial part of the puzzle in understanding the strong equity returns year to date that we have witnessed in the index in several parts. The first way that inflation has its reduction has impacted is that interest rates try to follow. Monetary policy is meant on the intent to adjust interest rates according to inflation. So as inflation has come down, interest rates have come down, but with a lag. And so as interest rates come down, then fixed income instruments, bonds, etc., government securities don't appear as attractive to investors because the yield adjusts downwards. The second way that it impacts is that as inflation comes down, earnings of companies tend to look better going forward in real terms, so inflation adjusted terms. So as companies' earnings are expected to be better, then that is priced into the stock market. So the fact that inflation is coming down is very, very important, and there's many reasons why we should expect the equity market to remain strong. But I always urge I don't give financial advice on television, nor should anybody else without the caution, but it is important to keep in mind the fundamentals and exercise judgment and keep the good vibes, the euphoria on one side, and look at the fundamentals of the market at the same time.
So how indicative, how much, when we talk about the depiction from this particular bullish trend at the Pakistan Stock Exchange, about the overall health of economy and the kind of efforts that have been put in by the authorities here in Pakistan, getting into the IMF loan program, trying to bring in tough measures in order to stabilize the economy. Then we have seen this continuous bullish trend in the recent past of the Pakistan Stock Exchange. How much does that speak about it?
It is a reflection of it because the stock market's ebullience and strength reflects the fact that sentiment is strong because things are not as bad as people feared they might become, not just for Pakistan, but for frontier markets as a whole. There was a feeling that many of these countries would go through a really difficult time, and all of them have done quite well because we have realized that as global inflation reduces, things are not as bad as they feared. Kenya, as an example, Argentina, as another example. The stock markets have done very well in these countries because there was a very big doom and gloom in the sentiment in global equity markets, and fixed income was a bit too strong. There was too much money put into it because interest rates were high. So that is reflected. The other point that you've raised is that economic reforms have been taken, an agreement with the IMF was secured, and measures are being taken to implement that with strong political will. These are all good signs too, because what they do is they give you a sense that the economy's fundamentals over the long run will probably be better if the reforms are taken wholeheartedly to their fullest extent, and we won't have the kind of cyclicality that we have experienced, as my colleague was suggesting, that cyclicality in economics of Pakistan will not be so pronounced in the future, and rather it will be driven by stronger fundamentals. And all that said, as I understand, our stock market is one of the best in Asia, if not the best in Asia. But I don't know if you're willing to venture the assertion that we have the best economy in Asia. So there is something for that too in terms of measured sentiment.
Now, Mr. Shami, you already talked about this particular trend that we are witnessing at Pakistan Stock Exchange. It basically depends upon about the future scenarios. So we often get to hear a certain term, speculation. Now, how does that come into play when it comes to deciphering or having an estimate of the future scenario?
Obviously, this is basically stock market is a speculative market, Basically, you have to speculate that how much the future profit is going to be for a particular company or, overall. But I was talking about the fundamentals of the stock exchange, which are very strong. Fundamentals, I have told you that those are the fundamentals. The economy is going in the right direction. Taxes are being collected and trade balance is not high, and still now it's in the surplus even. So, and then one factor which I forgot some, so that was the political stability actually. So, you must have noticed that on 26 November when there was some problem in Islamabad and the stock exchange,
It
just
dropped
lose down
3,500
about
points.
3,500 point at one, but even and immediately after, that the cloud was busted, and you have seen that 45, I mean it increased 4,500 points, So, that is also a very big factor, So, it shows that the investor has a confidence in the present regime. They have a confidence on the present system, present everything, they feel that the present economic managers or whosoever these are, they can you can overcome the problem. So, that is actually a very important factor, So, but now they feel that probably they feel that the government might continue for another 5 years, I mean for this tenure complete, and that is very important. That tenure should always be completed. This is my personal view, that it should be completed.
Does that give that understanding among the investors of the continuity of the policy?
Continuity of policy, that is very important. So, another factor which actually helped maintain the confidence of people was the SIFC, because SIFC that ensured to the particularly the foreign investors that whatsoever the policies they will have while they will be signing the agreement, that will remain same regardless of this which government comes here. So, policies and all these things those will remain the same. So, those are very important factors which give confidence to the investor. FDI, FDI plays a very big role, because FDI gives a confidence, because when the foreign investor sees here, look at the economy of the Pakistan, he sees from very, his methodology is very, they go into the very nitty-gritties, all these things. So, they know what's actually is there, which probably our investor but our investor definitely follows that, So, if the FDI is coming, and now in PSX, Pakistan Stock Exchange, we are seeing continuously that the foreign investment is coming here. So, that otherwise I do not think the Pakistan Stock Exchange is overpowered by the foreign investors. I think it's only 5% that portfolio with them, but that gives a big confidence to them that okay, this if this is going in this direction, so it's going. So, FDI, otherwise FDI, I was looking at the figure that about FDI has increased for about 50, I think almost 56% increase in the FDI, So, which is a very healthy sign in the country. So, overall these things are there. So, I think if the policies remains, the the political stability remains the same, and they have a confidence, and monetary policy, I mean, which is likely to drop further. So, I do not think, and probably in one of my television program at when the market was at 50,000, and I was a question was put to me that it has increased from about 36,000 to 50,000. Oh, how bullish that is! So, it's going to drop. I said no, there is no danger. It might go up to 150, and it has now crossed 100,000. So, just today I was in another channel.
By what time do you estimate that it could touch over 200,000?
If the scenario remains the same, I think it's going to be in about the next 3 months,
Next 3 months, it's going to touch that 200,000.
Because it has surpassed all the expectation, because all the those pundits of the stock exchange, they were expecting that the 100 index.
So, what's required to keep it there? This particular trend continue and touch
trend continue. So, the PSX, the people, the big players were expecting that the stock market will reach 100,000 by the end of this year, I mean 31st December, and it has crossed, about in the November they crossed that. So, I mean still coming, I think it about 3 months maximum. I think, but it will be definitely it will be before the next budget, So, it is a continuous process, because still I am told you that there are two big
before
factors.
that, the next budget, you are of the view that it might touch that particular market.
Yeah, much.
Dr. Waleed, you already in your earlier take talked about one of the important factors to be taken into consideration is that how will these trends persist?
Yeah.
What are your estimates? If this particular rate at which we have seen this bullish trend at the Pakistan Stock Exchange continues. By what time do you expect it to touch 200,000? And where do you see these future trends going? Do you see some sort of force within, latent within it, that would keep it sustainable for another 6 months or so?
Well, I see a positive trend. I'm not really sure about when it will touch the 2000 mark, 200,000 mark, but still the political stability following the textbook theoretical economics, that sort of ease the way how you predict or how you estimate that a trend will continue, trend will in a positive phase or in a negative phase. So, given the circumstances of Pakistan's economy, it is easier to predict that this trend will continue, and this is what the confidence in the market look like. But now we need to plan for a bigger picture. We need to zoom in a little bit. How to bring more companies to the stock market, how to diversify the portfolio, how to bring innovation and give them this R&D so that they
How can that be done? How can the diversification
This
be
is the
done?
fundamental that Dr. Usman talked about, that we need to align it with economic priorities. We need to expand our economy in a sense that it is more productive economy, it is more knowledge-based economy, it is more industrial economy in a sense that more entrepreneurs and more businesses are being added to the economy, and that portfolio is being diversified, not just on the traditional sector of Pakistan's economy, but on a very innovative sort of, just like you mentioned in your introductory remarks, that there are climate adversities associated with it. There is whole economy of sustainability of climate agenda. We need to keep that in mind as well, and we need to broaden the industrial base of Pakistan so that more and more companies, they are joining the stock market, and investors are investing into it. Not just the stock market is booming, but the Pakistan's industrial base is also booming. This is what we need to plan from here, and that will sort of align Pakistan's stock
More
market
knowledge-based
conditions.
economy, more industrial-based economy. That's
More,
what.
yeah, more industrial-based economy that is backed by the research and development and innovation. That will pave the path for Pakistan's industrial development.
Okay, Dr. Chauhan, what's your understanding if this particular trend at the Pakistan Stock Exchanges continues? Where do you see it in the next 6 months? Do you expect it to touch the mark of 200,000? And also, I was reading some very interesting distinction of this particular rally as compared to those that happened in the past also, that this rally began with an interest rates at an all-time high. How do you look at that?
I'm hesitant to give a exact precise number. It may not touch 200K. That is a very high number. It would be double from where we are right now. But I would agree with my colleague that 150K in 3 months is very reasonable because the price to earnings ratio of this index as a whole has been very, very low, even compared to its historical. So if you even attain your previous history, keep in mind that that was also at a discount to similar indices in the region, I mean in Asia. So just to achieve a normal global standard of price to forward earnings, 1 year forward earnings would easily see this go to 150. There's nothing surprising about that. That would simply mean that your equity markets reflect a valuation that is in line with equities around the world. So that I can easily see happening. Beyond that, I agree with Doc Saab that it would require certain structural reforms. There might be more requirement, more demands from the investor class in this, that to see stronger signs, because at that point, interest rates would probably be priced in completely. They're already being priced in to some extent, and forward earnings of companies would also have to reflect strong growth, signifying that they are getting better. And if you look at the nature of our index, the KSC 100, 50% of it is just fertilizers and banks. So if you have strong agricultural signs, and if you have strong bank returns in an era of low interest rate, because perhaps their dividend yields are strong, perhaps they're charging fees from people, they're doing that sort of thing now already, then maybe you can see it go beyond 150. Otherwise, I think the euphoria will rise up till 150 just to attain a normalized multiple, and after that you would need some stronger signs beyond just the immediate ones.
Okay, so Dr. Chohan, what's your understanding as to how basically the retail investors should navigate through this current environment at the Pakistan stock exchanges? What should ideally be their priorities at this particular point in time?
Very, very good question. You see, right now the participation in our equity markets is actually lower than it was 20 years ago. So let's say 2007, there was 500K participants. Now it's about half that, probably slightly more than half. So what you will see now is, because people discuss the stock market, it is in the news, it is something, it does serve as a certain degree of a bellwether to an improving economy. Things are certainly not as bad as they seemed a year ago. More people will join in. And if you join in today, let's say you, Javed Tehami Saab, invest today, join the stock market now, and you see a rise from 100 to 150, it's 50% return. It's pretty good. Let's say you join at 120, then you have that decreased margin of gain. Those who saw this coming from 20K to 150K make the most. And at some point, if there is a turn, the amount of incremental gain people get is low. So this is a normal cycle. Depending on your timing of the market, you will gain a proportional return. Now, there's a mantra on Wall Street that it's not timing the market, it is time in the market. So rather than playing the timing game, you just spend a lot of time in the stock market and you'll have better returns in the long run. I'm not sure that that is true for an equity market like Pakistan's, because actually timing the market may be the better case here. So as sentiment continues to remain high, people coming in will probably not make the same returns as those 200K investors that have been in this through this rise over the last, or let's say year to date, the last 11 months. So that's the difference. Now you will see different levels of gains from what is happening.
Right, Mr. Shami, what should be the priority for the retail investors at this particular point in time, given this particular current environment at the PSX?
I think my message is to the retailer, because uh, uh, normal, the small retailer, it becomes a big victim whenever it crashes, because it looks at only looks at that that share has gone up to this value in last 3 months or 4 months, so it just starts investing. It doesn't see that what is the real fundamentals behind that, or not, because he doesn't have any study for that, So my message is this, that they should look at this, that the earning, what is the earning per share of that company, which is the solid company, what is the past record, what is their past record of giving dividend, giving bonus shares, and their stability in the last 4 or 5 years. And so all these things they have to look into the factor, particularly the earning per share, that is very important. So if that fundamentally strong, then there is I mean, maybe the stock exchange might have some fluctuation, but overall his investment will be safe. But if we just look at sometime what would you call in the bed chal, so then definitely he can lose money, but just looking at there is some, because because there are people who manipulates also, there's no doubt in it. They increase, sometimes they increase a share, just make a bubble of that, sometime, and then it busts, at time, when it a lot of people have invested.
What are the factors that need to be taken into account once making the investment?
This is actually this is the work of the regulator. This is the work of the regulator, that look at the, they have to, because Pakistan Stock Exchange and then Security and Exchange Commission, I think their regulations are now a little better, because whenever the share, now they have circuit breaker, it cannot increase more than 5% in one trading session, and it cannot lose down by 5%. So then its trading is stopped. So and then if it continues, it is a share is being increased by manipulation. So then they look at, they watch it, and then they ask what is the reason, is there, and because in past I cannot exactly quote, I don't remember those, but recently they have some even some banks and some other that ask their explanation. So their regulations have to be very tight, because that is because all the small investor doesn't know all those nitty gritties, and he cannot go into those detail. He doesn't have the access access on those, what is actually going on behind that, what is their profitability, and that company will never tell the truth also. So I think their regulation has to be
So
very
does that
strong.
also depend on the time that has been spent in the market? On that very principle has already been said by Dr. Chohan. It's not more about the timing, but it's more about the time that has been spent there. If I have got you correctly, Dr. Chohan.
Yeah, obviously, experience gives you a real, unless you don't have an experience. That is very true. But I think for the small investor, I will recommend them they go for the mutual funds. Mutual fund also they invest in the stock exchange. So mutual fund is comparatively safer. And these days, for the in the last, I think last year and this year also they are giving enormous profit, passing on the profit to the investors, and because they have the proper trained people and they know the market in power, so they know. So I think the mutual fund for the new investors will be good. I think that will be a and go for the good mutual fund which are trading like good banks. Almost all the banks, I think big banks they have now.
Right.
So I think this could be one suggestion. It's up to you.
Right, Dr. Waleed. Now, when it comes to prioritizing for the retail investors, how do you compare what should be the priority at this particular point in time, given this particular current environment at the Pakistan stock exchanges? Should they prefer quality over quantity, and how does that long-term compounding phenomenon comes at play in this whole situation?
Well, I think at this particular point in time now it is more about quality than the quantity, because in the previous stage it was increasing at increasing rate. Now it is increasing at decreasing rate. So we need to, particularly the new retailers, they need to study that. They need to look for the long-term compounding again. But still, the quantity should not be preferred over quality at this point in time, and it would give Pakistan's economy a good thing as well. If there are more people that are preferring quality over quantity, it will not only increase in terms of magnitude, it will also be enhanced in terms of quality and in terms of diversification as well. So my advice would be that go for the long-term investment, not in terms of speculation or making a few quick bucks, but go for the long-term horizon. So in that regard, maybe preferring a long-term commitment at the market, that would be more preferable for the retailers, not just in terms of making profit, but to get a sense of the market, and that will again boost up the confidence of the companies to join in and having it more diversified. So in that way, maybe if we are following the IMF program, which is sort of feeling a little turbulence, but still good progress is being made on that front as well. So in a long term, there are good signs, positive signs, but still the speculators, they need to be
so in that sort of a scenario, in case of any sort of manipulation or any sort of speculation, what, as per your understanding, could be those key factors that need to be taken into consideration once somebody is intending to invest?
But again, it would depend on the regulator to sort of have these safety railroads installed at the market. But still, these retailers, they should know the market. They should plan for the long-term horizon, not the short-term. Again, profit-making or speculatory investments into the stock market. Again, quantity should not be preferred over quality, but still looking the deeper and fundamentals of the stock market. And again, that is what are the quality of the share, what is the diversification rate of the company, what is how they are investing it, getting the funds, and how they are diversifying and expanding their portfolio in a way that the market is booming as well as the companies are also booming. So this is what again these retailers should know. Again, the macroeconomic indicators, maybe the Tobin skew, the efficient market hypothesis of stock market, that should be taken into consideration. But still, the newer retailers, they would not be aware of these nitty-gritties, but still they need to follow the trend. But again, following the trend may be not as much as useful for these retailers. They should know. I would go with the advice that invest in the mutual funds. Yeah.
Right, Dr. Chohan, and now a very important statement made by Finance Minister Mohammad Aurangzeb, reiterating Pakistan's commitment and dedication to implementing the IMF loan program, and also with the ongoing economic reforms and efforts to simplify the business process, how important and crucial it is to continue following that particular IMF program, the conditions associated with it, in order to keep the economy right on track. Also, and what's required, what should the authorities ideally be doing at this particular point in time, given the fact that we are in that IMF loan program, how the business environment could be simplified?
Absolutely. First of all, we should give credit to the finance minister for the hard work and the tough decisions that have had to be made over this last year. It required patience. There's a lot of criticism, but in the end, you see that these measures have worked and the political will has been mustered. And so a lot of credit goes to the finance minister. Now we have to stay the course. There is no second doubt about that. What you can discuss is perhaps the extent to which things have to be done within specific areas, because that was a deal negotiated in a time of acute financial distress at the beginning of 2024. The realities on the ground everywhere in the world are different now. So there are tactical level discussions that you could have at best, but strategically, you should stay the course on this. And I would like to see other bellwethers of the economy that are more inclusive or more representative of Pakistan than the stock market also do well. If the stock market has, let's say, 400,000 participants, that's just 400,000 participants. If you have, for example, a real estate market that is also booming, that involves a lot more people than 400,000 directly, but certainly indirectly in terms of people who own homes and their net worth rises because of their householdings. And then even better would be that the Pak rupee strengthens on a free float basis. So not through design, but through competition in the international markets as a currency. I remember a time when it was very recently that it was 150 to a dollar. I remember a time when it was 100. I remember a time when it was 60 rupees to a dollar. If the rupee gets better, that helps every single person using the Pak rupee, which is 250 million people. That's a whole different order of magnitude than the stock market. And that's the only way to get there is through reform. So our bellwethers, one order of magnitude after another, should all improve, inshallah.
Okay, so the improvement in Pakistani rupee, the road to improvement in the value of Pakistani rupee, what's required for that?
Fundamentally, it is a question of the supply and demand of the rupee. And the demand for rupee has been fundamentally low because we don't export as much as we should. So now, and the supply of rupee has been extensive because of COVID stimulus, because of this money printing agenda that has existed for decades. It's not new. So if you curb those two, for example, you align the supply in a reasonable manner and don't use inflationary tools or monetary tools to stimulate, which has been a lesson of the past. We're not doing it now. And at the same time, you have strong export growth or a demand for your rupee abroad for other reasons, then you will see that the increase in the value of the rupee on a free float basis. So making your rupee valuable is what matters. And to do that, make sure that people not just here but abroad also really need the rupee. Export good stuff.
So to what extent do we need to see that enhancement in the exports, both in terms of goods and services? In the recent past, we have seen the trend, owing to the efforts put in by the government, they show a trend of increase.
Yes, absolutely. Well, this is actually a very good measure of us looking at the economy and the stock market, one against the other, because the stock market is doing well, but many of the names listed on it, as I said to you, half of the index immediately, if you look at it as a circle, half of it is banks and fertilizers. Do your banks export much? No. Do your fertilizers export? Perhaps, but not really. Domestic oriented firms are doing well, but what about the export oriented ones? And that's where, again, the quality of earnings matters. What are they getting? And over time, you're actually seeing remittances becoming a bigger source of foreign fund flows into Pakistan rather than FDI, which was mentioned earlier. So again, we look at how the economy is doing versus how the stock market is doing. And I want our exporters to do well. They will, because inflation is coming down. If energy reforms take place, their input costs should come down. if there's more money floating around for businesses rather than other non-productive uses, then that should also help exporters. So there are structural factors already favoring it, plus reforms are helping it. Plus, I think they should do a good job as they expose themselves outwards into a competitive market, which is a regulatory issue, which my colleagues have correctly mentioned.
Right. Mr. Shami, what's your understanding when you talk about improving the value of rupee against the greenback in particular, what's required on the front of enhancing the exports? To what extent do you think that particular enhancement in terms of enhancing the exports is required in order to have that very considerable addition of the value in PKR?
Have a big role, very big role, because it definitely relates to our trade balance. If your exports are more, because Pakistan basically is not a export oriented economy, like we see China, Korea, Vietnam. We never actually stress much on the exports. Now government is planning to double the exports in the next 5 years. I hope so, that it can be achievable, no problem. But the thing is this, that that plays a big role, no doubt in it. But one factor, I think Dr. Usman also missed, while you put the question about the valuation of the money market here, the exchange market in the Pakistan. Actually, the big exchange factor which actually helped improving the rupee was that it used to be it had become a speculative market. Speculative market for parking its saving, and you getting overall money, or I mean overnight getting money, because there is it's a open secret that about 9 trillion rupees in Pakistan are out of the banking system. And this money, this cash money actually basically revolves around 2-3 factors: dollar, purchasing of dollar, going to the stock exchange, or the property, or gold also. But gold is, international factors are there, but these three, so property, was going down, so obviously no question. You must have seen that whenever the dollar, the rupee depreciates, whenever the rupee depreciates, the stock exchange always, crashes. Whenever you see that the stock exchange increasing, our rupee parity is becomes better. Because people don't save in the dollars. Now it happened in Pakistan. It happened in Pakistan that in the last 1 year or 2 years, people started saving in the dollar. They, instead to rupee, they said, no, rupee is going to crash further. So speculation actually created 3 markets in Pakistan. One was the interbank rate, and the second was the open market rate, and third was the grey market rate, which was being used by these people, by the hundi people. And the factor which started, how that started improving, was that the crash on the hundi business, and the smuggling of dollar, that was stopped. And then that when people came to know that it's not going to increase, or it's going to decrease, so they started bringing up their money. So that is a big factor.
With such a phenomenal growth at the Pakistan stock exchanges, the currency rate remains somewhere around the very similar mark. Why so?
No, Abis, I told you the currency is our currency presently. If you go for the talking about the money, demand and supply, I say it's 50 rupees still overvalued. Its rate should be about 230 or 220, because the international agencies have said this thing. I have been saying this much before. But the thing is that Pakistan, since it has to build up a reserve, so State Bank is purchasing the dollars from the open market. This is why it's the exchange rate in Pakistan still is overvalued, but it is artificial overvalued.
Right.
Once State Bank start buying the dollars from the open market, it will crash to about 220 or 210.
Point well taken. Unfortunately, short of time, Dr. Waleed, quick last comment regarding as to how crucial it is to continue with this IMF program in order to keep that stability going, rather to see that economy thrive after it has become completely stable.
Well, very, very important. We need to sort of rule by the economic rule, not the political discretion. And economic rule is that follow the market, follow the textbook economics. And textbook economics says that let the market run, let the competition decide what the price of the commodities, and these commodities are exchange rate, these commodities are your stock market indices, and what should be the inflation rate, and it should be a political thing. It should be ruled by the economic rules.
Dr. Khalid Waleed, economist, thank you very much for being with us on the show tonight. Mr. Humayun Iqbal Shami, President Pakistan Economic Forum, thank you very much for your time also. On Skype, we were joined by Dr. Usman Chohan. He's an economist. Dr. Chohan, thank you very much for your time, also for being with us on the show tonight. Really appreciate that. With that, we come to the end of today's show. Till the next one, take care.